Back with ET now, budget headquarters, just counting down to the budget speech. The finance minister is already in the parliament with that red-covered iPad of hers. But I'm going to quickly mark what the markets are up to. And actually nothing if you just look at the index. The index is just about a minuscule in the red. We've definitely had a weak handover from the globe overnight. And yes, the communication from the White House is that there are tariffs which are going to be coming as soon as today. But that said, in this weak global backdrop, with the kind of FI selling as well that we've seen, we've also seen that in the last 2 days, there has been some amount of short covering, especially when it comes to individual stock futures levels. And you've seen the VIX cool off, positions have been lightened. So therefore, the scope to actually see the swing up could be higher should the budget give us reason to. And who better than our star panel right now, our think tank, joining in to answer exactly that, whether the markets and all of us will have any reason to cheer or not. R. Gopalan, former Secretary, DEA, and former Finance Secretary on the show with us. We also have Ashok Tyagi, whole-time Director, DLF. And I have with me right here, Rohinton Sitwa as well, Direct Tax, Deloitte India, joining in on the show right now. Gentlemen, all of you, thank you so much for taking the time out and joining us on a Saturday. Rohinton, let me start off with you because that's the first thing that all of us look out for, right? Taxes. Anticipation is really high that perhaps a tweak in taxation is something that the finance minister has as a tool in her hands to try and give the consumption segment, which has really been beleaguered, a little bit of a fill up. What are you penciling in?
So there will definitely be a tweak in the slabs, etc. for individuals. That's widely expected. Inflation demands that, and it happens every year. But what I'm really interested is some of the ease of doing business provisions that we've asked for and detailed out in part of our budget presentations to the government. And this is a theme that not only in India but extends around the world. So you've heard Donald Trump trying to do it, cut the red tape. That's what the economic survey is telling us, that government, please, hands off. So I think what we are really looking for is something like that, some provisions which can again re-invoke what I would call the animal spirits in industry. And essentially over there, just to give you an example, I mean, you and I, we get our tax refunds really easy. You know, you file a tax return within 2-3 days, and some people within hours get their tax refunds. It's not the same for companies. They really struggle, even when the refund is due to them. The amount of follow-up and red tape that's in the process to actually realize funds is very, very significant. So I'm really hoping a significant cut in some of the red tape that the government, needs to do.
Right. Okay, that's something on the taxation as well as the red tapeism which consists or persists in the system. That's something that we're expecting from the House of Deloitte. But Mr. Gopalan, if I could come to you, just taking a leaf off from the Prime Minister's comment yesterday where he was, literally with folded hands praying to the deity that the budget has something for the poor as well as the middle income group. Do you think the deity is going to answer his prayers?
Well, that should be, because if Prime Minister makes a statement like that, he probably knows what is biting. So he would certainly, ensure that these people are addressed, these cohorts are addressed. So that we will look for something in the budget. But I am looking at the budget in a slightly different way. What I am looking at is that if you look at the last about 15 years, we find that we are, our economy is caught in a structural kind of situation. It doesn't move. If you look at the various components of expenditure, they are almost constant with a very minor coefficient of variation. And if you look at within those sectors like manufacturing, they are all stuck at particular levels, like for instance, high tech at a particular percentage. So everything is stuck. So how to ensure that moves is going to be very, very important. And for that purpose, we need to look at how the investment is going to be handled, income and employment, how that is going to be looked at, productivity and human resources, which with skills are going to be another emphasis which I would look forward in the budget. Obviously, there are new tech areas which are very, very important, like AI, biotechnology, quantum computing, green energy areas. These are all very important. The government has been doing some work on this, but how fast they are going to ramp up these will be very eagerly watched. And I would also look at debt to GDP, which is going to be very, very important for me. And at an outlandish case, I would look at what the primary deficit is going to be. So that is going to be, for me, that's going to be very important. So that's where the government is in a position to control its expenditure. So, expenditure which is required to be, controlled. Of course, government has to do expenditure. Without expenditure, government expenditure, the economy, GDP growth, there is a correlation between government expenditure and the GDP growth. So in that sense, we need to have the expenditure, but how that is changed across the various components is something which we need to look at.
But Mr. Gopalan, do you think the finance minister has that kind of elbow room to play around with expenditure? I mean, yes, sure, the GST collections have been impressive, but other than that, do you think there's enough elbow room?
You're asking me?
Yes, Mr. Gopalan, for you.
Okay. Well, there are ways in which further, revenues can be brought in. Disinvestment is one. And also how to monetize the assets which we have got. We have been talking about it, but we need to accelerate that to ensure that money really comes in that way. And your efficiency of collection, tax collection, has to improve so that you are able to get. Today, you are looking at total of about 17 to 18% of the GDP, or 16 to 17% of GDP is a tax collection. We can go up to about 22% without much of a difficulty. We have got technology, we have got everything lined up. All we need to do is that little bit of focus on that to ensure that incomes really come in. So to me, that's a better way of looking at how the fiscal situation has to be managed.
Right. Quite interesting. I can see Mr. Tyagi is also right there with us. Mr. Tyagi, hi. I should firstly ask you, where exactly are you joining us from? Is it the Dahlias or some other exotic project of yours?
Well, actually, I'm joining you from my hometown, Dehradun. So I'm right now in Dehradun, actually.
Perfect venue for a Saturday, I should say. But
Yes.
tell me, do you see the budget actually give a leg up to consumption so that more and more people can afford your homes?
So clearly, I think, in all fairness, I have to concede that the real estate sector, especially the premium and the luxury end of it, are doing well, frankly. I think the two things because it's the overall economy which drives that end of the sector. So I do hope that, some more steps to give more disposable income in the hands of people, is done, as was also, mentioned by the earlier speakers. But honestly, also, given that she has to walk a tightrope, I do believe that it will be good for both the money markets, the interest rate regime, and the overall growth scenario if the fiscal glide path that she had laid out in the last couple of years is still adhered to. Because frankly, a negative tweak on the fiscal deficit front would definitely be upsetting, at least in the medium term, even if in short term, people do end up celebrating some of the relaxations that they get. The last point, I think, which Rohinton mentioned, is very important, that at least from the corporate tax administration standpoint, I do believe that, some more steps to ease it out, including maybe some tweaks required in the way the face test is done, etc., are important. There are obviously a series of micro asks also, which through the industry chambers people have asked for, which I will not, sort of duplicate the panel's time. But I think those three pieces really would be our ask. There are smaller things, like I think the real estate is still not considered a part of industry from many sections of the income tax, and I think over time that distinction needs to go away. So that's it, Aisha.
Right. No, I definitely want to know those micro points as well. But what I'll do is I will take a very quick break, come right back, and we'll continue our discussion with our budget think tank.
All right, now we are joined by Rajneesh Kumar. We are now joined by Mr. Tyagi, who's already in conversation already. And I'm just going to, त्यागी साहब, सैटरडे मॉर्निंग देहरादून से पकड़ लिया आपको।
हाँ सर।
देखिए बजट क्या करा सकता है। Okay, now the budget pictures are coming from the parliament And yes, there you go, there you go. That's the finance minister. The budget document is in her hand. She's going and walking towards the floor of the parliament, where she will stand in minutes from now, and she would be presenting or tabling rather the first full budget of NDA 3, a budget which in a sense needs to do what could be called as a balancing act. Well, all budgets have to do a balancing act, but this time maybe there has to be a very strong intent which needs to be exhibited. Capex is low, economy has slipped, rupee has hit a new low, and the consumption sector in a sense needs some degree of some degree of support. Mr. Kumar, I'm asking this question to everybody. इधर देखो capex slow, उधर देखो consumption slow. इधर देखो, उधर देखो, या fiscal deficit को देखो. What should the finance minister look?
No, one is that whatever was budgeted, they should spend. Last year, the capex budget was 11 trillion rupees, and we have not been able to spend the proportionate amount. So one is the budgeting, and then the other is the actual spend. Consumption, I think it is all over the newspapers, everywhere, every analysis that the real wage growth, it is negative in last 6 years. And that is where everyone is expecting that there will be relief for the wage earners and the middle class, which can give boost to the consumption. And fiscal deficit, I think we must give credit to the government that on fiscal deficit front, the required discipline has been followed. And I don't think that there will be any change in that approach.
So, Mr. Gopalan, fiscal deficit cannot be compromised. That is perhaps a truism. Consumption needs to be revived. That is the need of the hour. And capex needs to be committed so that the economy recovers. Now, how will this sort of impossible trinity, which will be achieved, which is focus on capex allocation, increase, tilt the policy towards stroking consumption without compromising the fiscal deficit?
Yeah. A short while ago, your colleague asked the same question, and the answer to that will be that we'll have to increase the revenue. How to increase the revenue is that you have got a disinvestment. Chandrajit Banerjee was mentioning about that, disinvestment and monetization of assets which government started earlier, which we need to pursue in a very, very big way. And also in tax collections, I mean, we are about 16 to 17% of GDP or total tax collection. We should go up to about 20-22%, which is something comparable countries do. So whatever the loopholes are there, we are going to plug, use technology very extensively to see that, I mean, people who try to dodge the government on payment of tax, evasion of tax, they must be, the amount must be collected. And secondly, we also feel that, our judicial system should be very fast in ensuring that some of these cases which are heard are disposed of very quickly as possible, so that it does not cause harm to the existing activities which are running. So I think there is a way of doing this, but it requires tremendous amount of focus from the political executive.
I want to just paint a very simple picture here. One need of the hour is to fix the rupee. We have, our largest import is oil. One large component is electronics, which is a structural change which is happening, and third is gold. With gold prices at an all-time high, for demand for gold is high. I think it was in the last budget or the budget before that, the custom duty on gold was removed. Should it make a comeback logically to protect the rupee? Logically, what do you think?
So it is possible. I mean, the way prices have been going up, it is possible that the government will look at addressing that part of it. But if you look at the first two components of our import bill, that's where the government really can play, because gold is something which holds an emotional value to most Indians, and it's very difficult to kind of, whatever the price, Indians will continue to buy it. But with regard to electronics especially, what I see is the PLI is actually making an impact. Rather than putting out policies simply for export increase, one of the policies of the government has been import substitution. So if we can continue with PLIs, especially for areas which make import substitution, that brings down our import bills and that gives the, the room for us to maneuver in terms of the rupee as well. I mean, even if you look at the way the government is trying to balance the fiscal deficit, actually the taxes which, as we are actually seeing the components of our taxes starting to mirror slightly more advanced countries. We have direct taxes now forming almost 60% of our tax collections. Otherwise, earlier, it used to be indirect taxes, which are easier to levy and easier to collect, forming a big chunk of our collections. We are also seeing, out of our direct taxes, corporate taxes actually becoming a smaller component and personal tax actually becoming a very large component. That's a very good development, because our base for personal tax to increase, not the rate of tax, but the absolute number of assessees is really very large. And consequently, if we can focus on actually continuing to increase the base of personal taxes, that gives the government a little play area to actually do something for corporates who will then unrelease who will actually release the investment dollars that are required to push up capex.
And also, Aisha, something which I hope something which is a mention and something which in a sense gets acknowledged is that the wild card is Donald Trump.
Yeah.
And it is about tariffs. So can something be done for the steel sector? Industry has been crying about a protection for the steel sector. Can this budget be a forum? Because it's also a forum where you want the world to see you that, okay, we are there for local industry and we would protect them. If steel is getting dumped into my country, if gold is getting imported into my country, can I do something to make that messaging? The steel duty and those duty protection duties which you're talking about, countervailing duties, they can come outside budget also. But maybe in this budget, something really could come in which in a sense could be important. Right, Swami sir is also ready. Good morning, Swami sir. Good morning. So are you expecting something big bang in today's budget, or it could be just a mild shot of caffeine for the economy? Something big bang or a mild shot of caffeine?
Sir, I do not expect that this is going to be a highly stimulative budget. I think the focus, Nirmala Sitharaman will say, I had promised 5 years ago to get the fiscal deficit down below 4.5. She's going to say, I am going to achieve it, and she wants to declare victory. I think that is the key thing. With that in mind, and if you then add a slowing world economy which is going to slow India, I think if she is realistic, she should say that, there is a limit to the amount that she can do. So, any country where the fiscal deficit coming down from 4.9 to 4.5 is one where it is not a stimulus. It is an anti-stimulus consolidating, which is highly required in view of the very high debt to GDP that we have. So, it is remarkable that we have achieved about 7% growth average, even while consolidating, to get down from 9.2% deficit all the way to 4.5 is the kind of squeeze which is normally a kind of IMF austerity where you're having to slash spending. But here she has managed to bring it down even while raising capex and averaging 7% growth. That trinity is extremely difficult to achieve, and I think she will boast about it. But for the coming year, I do not know whether she will mention the problems that Mr. Donald Trump is going to cause. The truth is that the budget cannot really anticipate what he will do, because he changes his mind from day to day, and from extremes he can go down to other extremes. But I would say that this should be a budget where we hunker down and say some very bad things are going to happen. Let me not be adventurous. Let me not indulge in too many giveaways. Let me keep some reserve with me in case things go badly wrong. I think that is the kind of budget we should have. I do not know whether that is the kind of budget Sitharaman will in fact give. I think she will be tempted to give an optimistic budget. I think she will be tempted to take best case scenario and say, oh, we will deal with Mr. Trump, although there are problems. And she will once again announce the trinity: reducing the fiscal deficit, increase capex, 7% growth. And within that, I don't think she's going to be, she can give a sop here and there. A thing like steel, for instance, people are complaining. That can be done by anti-dumping duties. You do not need to get into the budget for that. Similarly, in the solar cells, those guys are still finding that despite high import duties, Chinese imports are still very, very cheap. So there are some things that can be dealt with by anti-dumping duties. The budget should not be getting into those. So I think the budget should be getting into consolidation, saying, hooray, we've done it, and hope that we deal with Trump and we'll get to 7%.
Swami sir, depending on whom you are asking, you will get a good and a bad definition of budget. As a taxpayer, I don't want to pay more taxes. For me, budget is good if I have to pay less taxes. For a financial commentator like me, a good budget means fiscal discipline is maintained, tax assumptions are realistic, and new pro-growth schemes are announced. For markets, it would be bring expenditure back, make sure that capex is actually not compromised. So what is the definition of a good budget then, Swami sir?
As far as I am concerned, I am already paying a lot of tax, and I have no problem. I pay that tax. The real problem is the middle. Surjit Balla has described how there is the middle, an enormous business middle class which is not paying taxes and needs to pay. So I think those are the people I would say should be paying. But at this point of time, since the middle class is very important for the BJP, it is possible that there will be some relaxation of the tax rates simply to compensate, for inflation. We give these things in absolute amounts, not linked to inflation. So every time you merely compensate for inflation, it can be shown as some kind of relief that Nirmala Sitharaman has given. So that kind of small adjustment, yes, I think that could come. And to that extent, maybe she's able to persuade the middle class. It is a good budget, even while persuading people like me that even from our point of view, it's a good budget. The real problem is going to be the unknowns. You talked about what will be the impact on the market. Sir, today the market is moved not by what Nirmala Sitharaman says, it is moved by what Mr. Donald Trump says. That is very, very clear. So we've reached the particular stage that, we are steering the ship in a particular direction, but enormous waves are coming from other places, and those are the ones that the market is really worried about. So we will have to wait. We will have to wait and see. I cannot remember a previous budget done in the background of a sharply falling stock market and a sharply falling rupee. It's a very, I think you have to go back to the taper tantrum to remember conditions like that. So external conditions right now are not good for the market. The uncertainties that Mr. Trump has created mean that money is leaving emerging markets to go to the safe haven of the USA.
So it is such a valid point. Everything can be managed, but there is one enigma, if I may say so, or one factor which is Donald Trump. And Rajneesh Kumar has, I'm sure, a view on it. Mr. Kumar, do you think more than anything else, this is a budget where something needs to be acknowledged by the finance minister that the world will change, and the world will change, which could be, in economist terminology, deglobalization. In an industrialist, in a industrialist language, it could be high tariffs. Donald Trump, high tariffs. Do you see something coming in this budget, Mr. Kumar, which in a sense will be a strong signal to the world that hum khade hain aapke liye?
Well, let us see. This is just now another 10-15 minutes and budget will start unfolding. And geopolitical situation is always dynamic. And I won't comment upon what Donald Trump will say and what he will do. There's a lot of uncertainty around his speeches and his actions. So I think let us not, I don't think a budget can account for that what will American president be. The budget will be more guided by the strategy to make India stronger and achieve higher growth rate despite the geopolitical situation which may emerge and which nobody can anticipate.
6 minutes more and then we'll recap the sim. It will just get automatically recapped on the graphic as we speak in case just you tuned in. Hello, good morning, happy Saturday. The budget would be presented in 6 minutes from now.
And markets are waiting.
And the markets
They're absolutely
are waiting.
flat.
Which is not bad considering that on Monday, 3 days ago, this market was in absolute doldrums.
Yeah.
From Monday to now, everyone's saying thank you. I mean, it was a bad Monday. And from there, it could turn out to be a very good, Thursday, so to speak. The sim stocks will just come up on your screen. I want to put the budget walls also in terms of what's been, the Motilal Oswal budget reckoner, that what are the budget stocks and what are the budget trades. There you go, Purinjo, Indegene, I don't track this company, Proteon, Exigo. I look at Sandeep Sabharwal, I look at Madhu Kela, and I look at Samir Arora. We'll keep it very simple. Samir Arora, HDFC Bank, big idea. Large cap IT, big idea. Zomato and Paytm. Sandeep Sabharwal, Bajaj Auto. Buy them, he says. KEC International and L&T. Of course, disclosure, these are not recommendations or channel is endorsing them, and Madhu Kela feels that NBFC and financial services can really make money. Aisha, let's look at one and we can ask everybody here, the assumptions of the budget. Fiscal deficit, direct tax collection, capital expenditure number, and what would be the number in terms of, what's the fourth number? Fiscal deficit, capital expenditure, what's the fourth number?
Taxation.
Taxation,
any
direct
change in
taxes.
taxation.
No, I'm just talking about the numbers.
Yeah.
What would be a reasonable number for tax growth for FY26?
So, based on the last numbers that we've seen, the net collections could be anywhere between showing a growth of 13 to maybe 15%.
FY25.
FY25.
26, what should be a assumption which you would say is a conservative assumption?
They normally take conservative assumptions only in the next years. I would say they would estimate another growth of maybe 8 to 10%.
For direct taxes.
For direct taxes.
So they're expecting tax growth to be below the nominal GDP.
They normally take a very conservative estimate and then they true up the estimate as they go along. So then there will be a revised estimate, etc.
Okay. So the direct tax assumption according to the Motilal Oswal estimates, Aisha, is about 10.4. So markets, anything below 10.4 is a conservative estimate. Anything above 10.5, I would use that's an aggressive estimate. GDP growth, anybody can comment on this on the panel. The most important number, sir, for everybody is to understand the nominal GDP growth for FY26.
Mr. Gopalan.
Mr. Gopalan, what according to you is a reasonable and a conservative estimate for nominal GDP growth for FY26? And Tyagi Saab, I'm coming to you for this.
Yeah, my calculation is that it will be about anywhere between 10.1 to 10.3.
10.1. So let's assume 10.5 is the base, which should be the GDP assumption. Fiscal deficit 4.5. Tyagi Saab, what should be the tax collection assumption for FY26, which in your book you would say is realistic and conservative? Tyagi Saab.
So I think honestly the tax collection should grow at the nominal GDP rate ideally. Obviously there'll be some concessions made and hence there'll be some tweaks which will contract to them. But ballpark, if we're talking 10.5% nominal GDP at 10%-ish, I don't think they'll bake in a number less than 10%, sir.
Okay. Mr. Kumar, I'm reading out the 4 numbers to you. You can pick and choose the one you want to comment on. The consensus view on nominal GDP is 10.5. Direct tax collection is 10.8. Fiscal deficit is 4.5. What do you think will come out in this budget? Mr. Kumar, Rajneesh Kumar.
My take on capital expenditure would be last year it was 11 trillion. So we can expect that it should be 12 trillion plus in this budget.
Okay, guys, 1 minute, 30 seconds. And, I would have said the genie would be out of the bottle, the cat would be out of the bag. But in this case, it would be the iPad which would be out of the case.
Out of the sleeve. Yeah.
And a minute to go. Frankly, if I look at the markets, it's not a market where there is anything expected. If it is a budget which is reasonable in assumptions, if it is a budget which addresses the need of the hour, which is maintaining the uptick in capex and doing something which could be out of the box or something where the plowback could come back to the consumption, I think it will be well received, because the positioning of the market is such that in the run-up to the budget, expectations are low, anticipation is low, positioning is low, markets have been oversold, and that's how things are. So I'll let the perhaps world do all the talking in terms of where we stack up. It's a Saturday. I think everyone is working today because Mahesh Nandurkar was there on the TV, Rajat Rajgadia was there on the TV, the traders are back, so I assume it is like a full Saturday. But can the budget really be the swing event? I doubt. Can the budget give a relief in the short term, and arrest the free fall? Maybe yes. I don't think this budget will kickstart a rally, but if a good budget comes out, it surely could act as a back support. I will not be surprised if something comes on gold. I will not be surprised if something comes on steel. Whatever said and done, all assumptions, I can easily say I'm pouring cold water if there is a tariff war in the world. Whatever we are assuming, if there is war in the world, how can you take a view of the world, right? You cannot take a view of dollar, currency, exports, fiscal deficit, so then everything changes. So will anything come on that front when it comes to the duty, or will anything comes on that front when it comes to, any particular, all right, there you can see the speaker of the floor. That's the new parliament, and the budget would be tabled in seconds from now.
If you like this video, then like, share and subscribe to ET Now.